Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having fantastic days. In today's video, we are taking a look at the mass volatility over the past 24 hours with over $1 billion liquidated across the cryptocurrency market as Bitcoin drops back underneath the major point of support at 120,000 just hours after making a new all-time high. With this pullback, we have as well seen the total cryptocurrency and of course the total altcoin market cap drop a considerable amount, which we'll be discussing in the video today. We'll also be taking a look at the macro charts, discussing the implications this pullback will potentially have, how the price action is developing, whether or not we expect Bitcoin to go lower, and how the price could reverse. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can join us on Telegram with the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin by clicking this link, checking out a 54+ month trading track record, or watching a 10-minute video showing you inside the VIP channel. You'll get access to two channels, the main trading channel with exact entries, targets, and stop losses, and of course a variety of group chats from the general chat to the trading chat and education chat to the daily video, the news, community setup, help, and indicator/coding chat. Check it out, guys. We'd love to have you in there. Let's jump into the content. So, pretty big volatility here for Bitcoin, dropping from around 124,000 to just above 117,000, a considerable drop of around $7,000 in our one-day candle here, as you can see, represented by a very large single red daily candle. And that was as a consequence of course, the price rejecting from that prior all-time high, just breaking above, being unable to sustain above that level, and dropping back below the break of structure. We discussed in yesterday's video that breaking back underneath that 122,300 level, the break of structure, was going to be the short trigger for a correction back towards our uptrend, this short-term uptrend, and the loss of 120,000 being the trigger of a further potential correction as low as this higher time frame daily uptrend. We'll discuss this in a second. So we have seen around about 75% of that correction, maybe a little bit under 75% of that correction play out ever since the breakdown of the break of structure. So if you paid attention to the video yesterday and you caught that move, congratulations to you. But with this correction, of course, the total cryptocurrency market cap has seen a pretty significant pullback on the daily here, still green for that weekly. And of course, the altcoin market cap dropping back underneath, back underneath the $1.06 trillion level. Yet again, showing us why it is so important. We are waiting to see how this weekly closes. So we'll come back to all of this in the video today. Moving over to the market data, we can see here volume up a considerable amount of 25%, $605 billion over here in 24-hour volume, and liquidations jumping up just past 1.05 billion, up 159% over the past 24 hours. Again, liquidations with 881 million being long and 174 million being short. Still Ethereum with around 1/3 of those total liquidations. Bitcoin coming in second with 198 million. Moving over to the DXY, a little bit of a push upwards on the short term for the DXY again. That came as a consequence to PPI data coming out. PPI data came out, producer price index came out a little bit higher than anticipated. Now, not dramatically higher, but of course, when we do see PPI go up, it is generally going to be leading for inflation to potentially rise in a future period. Again, because if costs for producers start increasing, those costs actually do get pushed onto consumers. So that is why we see CPI eventually move upwards. So a bit of fear in the market there caused by that, but generally PPI doesn't have too much of a consequence on the price and the gain. That's why we saw the S&P 500 hold very well in the daily candle. At the moment, the S&P 500 has pushed up very aggressively. It is sitting just at our target, reaching our 6,500 target. This is going to be a psychological point of resistance. So we do anticipate potential corrections here for the S&P. Again, similar to what we're looking for Bitcoin, how Bitcoin broke back below the break of structure, triggering a correction. We'd expect the same for the S&P. So the S&P drops below that break of structure that is sitting around about 6,465. We would then expect pullbacks potentially as low as mid 6,300, maybe into the 50 EMA if we are able to sustain above the break of structure. We are still challenging that psychological point of resistance at 6,500. So we're going to bounce between here. If we break through 6,500, we then expect continuations upwards. So that is the overall assessment for the broader market. So let's go ahead and jump into Bitcoin. Before we do, guys, go ahead and sign up to BitGet, BitUnix, and BingX. We actually have an exclusive campaign we are running here, exclusive to the MegaWhale community on BitUnix at the moment. So shout out to them. $25,000 prize pool. You can go ahead and check out all the information by clicking the pinned comment, joining the Telegram, and then checking the information in Telegram. Of course, anyone who signs up to BitUnix via my referral link down below will automatically be entered in this. If you're already signed up, you will automatically entered. So go ahead and check it out. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll support me in making the content, and you'll get access to all of these exclusive campaigns. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump right back into it, starting on Bitcoin, then moving over to the higher time frame charts, and then finishing up on the total cryptocurrency and total altcoin market cap. So as we can see, Bitcoin has had a pretty significant correction of around 7,000 US dollars back towards the POC, POC being the point of control, the horizontal point within the visible range of price action where there is the most trading volume. So generally these levels act as temporary points of resistance and points of support due to the large historical trading volume within these horizontal ranges. So as we can see, Bitcoin is temporarily slowing down in this downtrend at the POC, which is more or less expected. And we have seen a few notable events occur during this correction. Number one, we did reject from that 123K top over here. We temporarily made a new top, but we have not sustained above the buy side liquidity. This is still a point of resistance. And number two, we have broken down the 120,000 and this diagonal uptrend spanning back since the 5th of August, one that we retested numerous times prior to this recent breakdown. So no matter which way we spin it, Bitcoin is currently in a downtrend on the short term, as we have broken through this uptrending diagonal support, with current resistances sitting at 120,000 and of course 123.1 to 124.5 thousand. Current supports are of course our POC, which is going to be 117.9, and our uptrending diagonal support spanning back since 74,000 in confluence with our horizontal support at 115 to 115.6 thousand. At the moment, Bitcoin Bitcoin is back within this horizontal range. Again, as we can see by the POC, a significant amount of horizontal trading volume within the ranges between 115,000 and 120,000 over the course of the last few weeks. If we zoom out slightly to a 12-hour chart, we can take a look at the key levels of which we need to sustain above. So primarily, Bitcoin is still going to be in an uptrend no matter what happens here on the short term, provided we are able to sustain above this higher time frame diagonal uptrend spanning back since this $74,000 region. Now, the reason this level is so important, if we go ahead and bring up some more indicators, is not just because of it represents the structure or the direction of the trend. It is because if we're looking at confirmation for continuations downwards, we can assess 3 different metrics. Number 1, trend. Number 2, structure. Number 3, strength. At the moment, we have a clear trend, we have clear strength, but we do not have a clear structure. So we're going to take 2 out of the 3 points. What we need to see when we're confirming breakdowns, when we're confirming continuations, we look for, out of the 3 points of validation, we look for at least 2 to be confident in that directional continuation. In terms of trend, we are still in an uptrend. In terms of momentum, so strength being a measure of momentum, we are currently negative. We have seen a breakdown on the RSI, and we have also seen a retest rejection. So this is going to be down. Therefore, we have 1 out of 3 of the validation points. We would need to be confident in higher time frame pullbacks. However, and this is where this trend becomes very important, if we do break below this uptrend, which could originate from the loss of 115.6, and as we know, the breakdown of the shorter term uptrend, which we discussed in yesterday's video and in today's video over here, the short term uptrend facilitates the potential for a correction to retest that trend line. If that trend line is lost, the expectations are that we then move into a higher time frame correction. Now, what could that look like for Bitcoin? Of course, if we take a look at what we have seen historically through this bull run, so we're looking at the price performance essentially ever since we broke out of that falling wedge pattern over here, which was again the end of the bear market consolidation before we entered a new bull run, right? We are looking at similarities in the price performance in terms of momentum shifts. So when we can see our momentum shifts, particularly downward momentum shifts, after expansionary moves, we had a downward momentum shift here, which resulted in a correction towards a 50 EMA and the Gaussian channel upper band, okay? We had a downward momentum shift here, which resulted in a correction towards the Gaussian channel and the 50 EMA. Again, the same 2 points we saw here. Therefore, if we see again a confirmed breakdown of this trend line, we would have the confirmation of 2 out of 3 points, and we would have the negative momentum shift to facilitate a potential correction to the Gaussian channel and the 50 EMA. And this is where it becomes very important because the loss of the upper band of the Gaussian channel results in the bear market starting. If we look historically, when macro corrections begin, it is generally when we lose the upper band of the Gaussian channel, because when we lose the upper band of the Gaussian channel, the probabilities become massively in favor of corrections towards the midline and through the lower band to the 200. So we will potentially see a steeper correction develop if these things occur. And that is why this uptrend is so important, particularly why we need to see the price sustain above this 115 level, because again, if we're looking at this horizontal low, this 115 level, it acted as support for a few weeks over here, and then turn into resistance for a few days over here, and it is now support again, but it has the confluence with this diagonal uptrend. If we are able to sustain this level, we avoid potential further breakdowns for Bitcoin. Now again, this isn't to say Bitcoin's going to enter a bear market. This is just to say the directional probabilities on the weekly chart will shift in favor of corrections for Bitcoin if we start to drop back below this steeper uptrend, because again, this is representing the trajectory of the current trend. Just like we had this steep downtrend, what we saw was when we broke above that downtrend, we then initiated and entered an uptrend. So the same would be expected. If we break the uptrend, we would then initiate and expect to see a downtrend, and likely targets would be the sell side liquidity, which is sitting between 98 to 100,000. So that would be the target if this trend were to break down. So a lot of bearish stuff to get out of the way first, because we need to understand the potential risks that are developing if Bitcoin does decide to see these corrections and break these key trends. It's all very well when expecting uptrends, but we need to be aware of the downside risks. So let's talk about the bullish side scenario, bullish stuff now, and then jump to the higher time frame. So at the moment, we are bouncing on the POC. That's a good sign. It's a good thing we're bouncing on the POC, but of course, we need to get back above 120,000. That is the key level. We need to break above 120,000 to facilitate any sort of continuation back upwards. So the expectations I have and the stance I'm taking is I'm taking a stance with the trend. I am short-term bearish, and I've been short-term bearish ever since we broke the break of structure, expecting corrections back to 115, then to see how the price is going to develop. If we develop short-term bounces, we then look for continuations back to 120, breaking 120, we were expecting new highs yet again. However, if we lose this level of support, we then expect corrections back into key critical levels of support, 110, 112. So playing it a level by level basis from now on, as Bitcoin has just created a high over here and we have seen a pullback. So we have to expect this to be a local top. Now, when we're looking at things like the 4-year cycle, yep, the market could continue to go up into the October, the beginning of October. That is definitely a potential, but it is not good to, put your way of thinking into a box and have this ideology or this idea that the market has to go up because the 4-year cycle says so. Remember, the 4-year cycle isn't predictive, it is descriptive. It is there to explain what has happened and what maybe could happen if we follow through, but it is not predictive by nature. It is not giving us actionable information. It's not telling us how the price action is behaving. It is not telling us what is happening in the price action. It is simply showing us patterns. It is simply showing us date range trends from historical price action and then inferring that to current price action. So it's not predictive. We're not using this to say, okay, the October 6th says it's going to be the top and therefore it's going to be the top, but it is the October 6th is the top of the 4-year cycle, and therefore we should pay some degree of attention to that, but understanding it may not necessarily be the top. The 4-year cycle may break this cycle, it may not break this cycle, and eventually it is highly likely it will break at some point. So I'm not taking the 4-year cycle top, as written in stone, as gospel. We are paying attention to it, but we're also open to the idea that we could see tops before or even after the 4-year cycle top. So that is why we're trading on a level by level basis. So that is it, guys. For the short term, those are the key levels. That is my assessment and what I'm expecting, and also how I am playing this short-term price action. Let's move over to the weekly one more time. Now, in terms of the weekly, there is also one other key level that we will need to break down for me to turn bearish. And I am bullish provided we remain above this level. Now, as I mentioned, although I am short-term bearish and expecting further corrections over here, only then turning bullish on the short term when we break back 120, on the higher time frame, the weekly, I mentioned already, we've only got 1 out of the 3 points to validate corrections, and therefore we have to stay with the trend. The trend is bullish and the trend is up. However, there is another level we're watching, that is a 62.09. Historically, when we break the 62.09, we enter 10% corrections or greater. Therefore, the loss of the 62.09, if that occurs, will likely occur if Bitcoin breaks its trend line, which will just be another piece of data to suggest a correction is incoming if that trend is lost. So we need to be aware of that as a potential as well. Moving over to the total cryptocurrency market cap, a rejection here on the daily. Weekly is still looking good. Positive momentum is still good. Holding above the $3.63 trillion level, still looking good. Pretty steep correction on the daily, back into these prior levels, change of character, watching to see how this area holds as support. If we continue through this point of support here, we will see steeper corrections back to the 50 MA. This is going to be a potential reversal point for the total. So we're watching to see very closely, again, with Bitcoin at the POC, at a local support, there is a chance we do see the market bounce from here, but we're watching very closely to see how Bitcoin reacts to the POC. Because again, if we do not bounce in the POC and go back to 120, we are going very close or very likely going down to 115.6, which is this lower point of support. The total altcoin market cap, again, holding out until the weekly close, watching very closely. Historically, we have failed to close any weekly candle over the last year, really, since 2025. This is 2025 January. The entire year, we have failed to close weekly candles above 1.06. Every single time we've got above, we've seen large weekly rejections back into or below the $1.06 trillion level. At the moment is playing out more or less the same. We have 3 days into the weekly close, watching to see how that develops. Again, we've said already, for the total altcoin market cap to sustain above 1.06 trillion, we more or less need Bitcoin to also sustain above 120,000. If we do break through this level, expect the next leg up for the altcoin market into 1.16 trillion. But of course, if we fail to do so, we may see potential pullbacks yet again for the altcoin market. But all in all, not too concerned for the altcoin market unless we see the loss of the $1 trillion level. And as we can see, we do have support down here, the sell side liquidity at around 1.02. So that is a potential reversal point if retested. So pay attention to all of that, guys. I hope you enjoyed today's video. A quick update, a lot of volatility, playing level by level. So to summarize the video and to leave you with one more thing, rejection from all-time high, mass liquidations. Liquidations sometimes result in reversals, which we are seeing with the short-term trend breaking down, Bitcoin retesting the POC, the altcoin market rejecting, and the total cryptocurrency market cap pulling back to change of character support. If Bitcoin is unable to maintain above the POC level, we will likely see continued corrections for the market to retest its monthly, multi-month uptrend spanning back from 74,000, where if lost, will put the market into a weekly downtrend, potentially marking this move as the local top. However, while we remain above this weekly uptrend and the 15.6k level, potential reversals are very much on the table. However, we need to wait to see whether or not those reversals develop from the POC or push one more little leg down to 115. The warning signs are there for steeper corrections. They will trigger at some point, but not right now. Paying attention moving forward. Thanks for tuning in. I'll catch you guys on Sunday's video. I'll see you then. Bye.